Good evening, everyone, and welcome to this evening's webinar. It's going to be a market update. I'm broadcasting live from my office. You might hear some background noise as well. I want to give you, as I say, a brief market update on the FTSE, the Dow, the major currencies, and then talk through a day trading strategy. Just explain to you what it is that some of the day traders do when they're active trading. So as I said, the first thing I want to do is kick off with a market update. Just give you a sense of where things are on equities, where I see the major currency directions and the indices directions before we actually get right down into the strategic side of things. And now the first thing I'd like you to do is just do a sound check, make sure everybody can hear me clearly. Just let me know by typing into your screens. Yep, great. I can see you can do that. So you can all hear. So that's great. We can kick off. That's fantastic news. The second thing I want to do is for you to just grab a pen and paper. You're probably going to need it from all I'm going to be discussing this evening. So let's kick off then. Day trading strategies. Simple scalping is the method I'm going to talk about. First of all, let's say the market update. Let's kick off with that market update. What you see on screen is the key reason why the equity markets around the world are hitting an all-time high. And it is simply this. And if there's only one thing you ever learn about the markets, then this is all that you do need to learn about the markets, which is they are moved by expectations. When our expectations are beaten, prices go up. Our expectations at the moment, despite the markets being at all-time highs, are still being exceeded by earnings. What you see on screen is for the US markets, and as goes the US market, so goes all the other markets, S&P 500 earnings are beating expectations by the most since the first quarter of 2012. In other words, despite all that we thought would happen with profitability as it started rising, we would expect our own expectations to meet that. In other words, we would price in our optimism. Well, in actual fact, we haven't priced in our optimism. What has happened is we still remain surprised every time companies generate ever increasing profits. This surprise generates ever rising stock market flows. My comment, therefore, is, my observation, therefore, is a very simple one. As long as these expectations continue to be exceeded, and there's no reason why they won't be, of course, you would expect expectations to readjust, wouldn't you? Well, they're not readjusting at the moment. So for as long as this situation continues, and I certainly think it will continue for the rest of 2014, I will expect equity markets to continue rising. In other words, I am bullish biased. Now, this doesn't really help us with a day trading strategy, does it? No. But I am setting the market tone first and foremost, and then, as I say, I'll give you a strategy which actually I've never, ever discussed anywhere on the internet. I'm not entirely sure why I've not discussed it. Maybe I felt it's too straightforward and simple to discuss. Actually, I know the reason why. It just takes too long in the past to put all this into slides. It's just very time consuming, but I have put it into slides for you all, especially, so you're going to be the first people ever to see it. As I say, let me first give you, as I say, the market update. Now, I mentioned that expectations is what's driving markets higher, and global stock indices are rising to all-time records, as you will see from the next chart. They are rising to all-time records right across the board, and even some of the worst indices that we should have been the most afraid of, Slovenia, Portugal, Italy, Slovakia, Ireland, Spain, they've been the best performers. Why? Well, it's the old Warren Buffett saying about buy when others are fearful and sell when others are greedy. And so that has played itself out. Yes, as you can see from the bottom of the screen, we are at an all-time high in the MSCI World Index. That's an index of the entire world. But also global stock indices, which have been rising to a record. Well, the Greeks we should have been fearful of, but I guess we got over that a little bit earlier. Sadly, their disappointment, both of their football team and their stock market, just never seems to end. Nevertheless, all-time high. My point is it's going to continue because expectations will continue to be beaten, and GDP is on an upward trend. In Europe, in any event, at the very least. In the US, yes, it's tempered off a bit. Because GDP is tempered off a bit, I do expect over the next couple of months some of the equity markets to come off a little bit, but after that, towards the end of the year, they will continue going higher, and we have not seen the highs for both the US and UK markets, is my view. We haven't seen the highs this year so far. In other words, we'll have new highs probably around October, November time, is my estimation. I'll explain this in a bit more detail. But people sometimes say to me, well, okay, GDP is a great driver of stock market wealth. But explain to us, Alpesh, aren't these markets expensive? You say they've exceeded expectations. And yes, they've exceeded expectations, I grant you. But if it's expensive, the stock market's expensive as a whole, won't that suggest that expectations won't be exceeded for very long? Or at the very least, we shouldn't be buying into them? Well, that's a very good point. So let me show you which are the expensive and non-expensive markets in the world. And here you can see the most expensive is the US. Let me zoom in. The most expensive tends to be the United States. And then amber means less expensive, but still a bit of a warning sign. And the cheapest, Austria, Portugal, despite all those rises, Hungary, France, Turkey. Well, you're not going to invest in Russia, really, are you? India is still relatively cheap despite hitting an all-time high. And that's my point. We're getting all-time highs, yet we're getting markets doing rather well. Look at China, still not very expensive. So you might say, well, okay, on what basis do you determine all of that, Alpesh? Well, the basis on which I've determined it is the price-earnings ratios of the companies, of the stock markets, and their price-to-book ratio in comparison to their long-term average. Okay, so if they, in relation to their long-term average, if their P/E ratio and their adjusted P/E ratio and their book ratio are all lower than their long-term average, then they get the green light. And there are indeed a few of those. And in case you want to see which they are in a bit more detail, there you go. And you can see at the right-hand side which ones show the green lights there. As I said, Greece is there. India is still there despite an all-time high. Classic example of why we don't really need to worry about the markets being too overly heated. Holland gets an amber, but look at Hong Kong, right next to China, supposed to be benefiting from all that overheating as it is. So, you know, you've got a bit there, and maybe Russia does come into our consideration. If others are fearful, maybe that's what we buy into. But that's not the reason why I'm showing you all of this. The reason I'm showing you all of this is to say, look at the world as a whole. There's a lot of green on there. There's a lot of not overvalued countries on there, and that's very good. That's a very good thing, isn't it, for us? In other words, I'm not panicked. I don't think there's going to be a sudden crash in the global markets. So let me therefore take you straight to the FTSE, and then I'll take you to the day trading strategy and how it is some day traders will do 200 odd trades in a day. Now, some people are saying that some of the slides are completely out of sync. I'm just going to check on our IT systems just to make sure. There is 1% of you where it is just not freshening up. For everybody else, it is bang up to date. And as somebody else said, look, today, looking at today's FT, markets are out of sync with reality. Let's just recap again. Price-earnings ratios are not at all-time highs. Markets are, but price-earnings ratios aren't. In other words, the share price compared to the amount of profits companies are making, they're making profits. Gross domestic product is going up. Given those two important factors, just to base it on absolute share prices and saying, oh, well, it's an all-time high or it's gone up 15% in such a short time, therefore it's crazy, that doesn't make sense. It's got to be crazy relative to something. Is it overvalued? Well, not on that basis. Is it that our expectations were so much lower and that the earnings are just not beating them? No, earnings are beating them. For all these reasons, it is simply not the case that we're out of sync with reality. By the way, I've got no reason to talk up the markets. As you're going to see with day trading, if we're doing 200 trades in a day, we don't care whether it's going up or down. And I really don't. I don't care whether the markets rise or fall. I'm not selling you a long-only fund. We're going to make just as much money from shorts as we are long. So the only incentive I have is to be accurate. Okay? So let me then move on to the FTSE. Yes, it's looking toppy. It's having a lot of difficulty breaking and staying above 6,800. But not only that, the MACD, which is a momentum indicator, it's an indicator of how prices are likely to move the direction. That's losing a lot of steam. And as I say, I would not be surprised if, we go as low as 6,500 before we go back towards the end of the year, towards the 6,800 mark. So at the moment, yeah, I don't have a problem taking a slightly bearish bet for the next month or so as people take money off the table. However, although that's the case, I think we will continue rising towards the further end as the year progresses, because profits will again push people higher. Profits will continue pushing us higher and higher. And that's the point, that there is a reason why after people take money off the table, valuations and so on, and you're going to start reading articles in about 3 or 4 weeks about how valuations are not that high after all. Okay, so the next thing I want to show is the Dow, and you should all see on screen coming up a picture of the Dow Jones Industrial Average. It will come on now. It's about 98% of you should have that on screen. I can only assume with the other 1 or 2% it is a problem at their broadband end. Let me show you the Dow. Now there we've got a solid upward trend. It's done a lot better than the FTSE. However, again, momentum is declining, and that's why I think the Dow will give us the lead. It'll start coming off, and it will start dipping a little bit in the next couple of days as we progress forward into July. So but as I said, I'm positive for the rest of the year in it. Now, let me just mention some of the currencies before I go on to talk about the day trading strategy. Okay, currencies, sterling, dollar. You can see which way I think this is going to go. I think we're continuing to see dollar weakness. This is partly because GDP, although it's been rising compared to the credit crunch, has been coming off a little bit. And as a result of that, I think it's great if you're planning to go on your holidays to the US. Now, again, momentum is coming off a little bit here, and so expect it to stick around 170. I don't want to take a bet that we're going to keep on getting weaker towards the end of the year, as I say, because the MACD is falling. So I'm happy with the 170 mark. I'm not expecting some sharp pullback, certainly not to 165. You can see the upward trend. I've drawn it by a red arrow. If we break that trend at any point, then, of course, you go short the dollar. You go short cable. But up until that point, this is the trend that's intact. Let me show you a slightly more interesting and detailed chart for euro dollar. Now for euro dollar, and that'll be coming up on your screens shortly, what you're seeing is the upward trend that I've shown. You've seen how that's broken and started since April going downwards. And I've shown that as well. And now it's starting to possibly resume back upwards again, maybe towards the 138 mark. What I am anticipating, as you've seen from the MACD, you've seen why that's led the price lower. The price has lost its momentum. And now it's too early to tell. It's at 130, just over 136, and therefore may have broken out of that downward trend. Not quite yet that it's on, but I think given that it's here, and given that the downward trend is this diagonal red line, I'm looking for it to go upwards towards 138. That's what I am looking for. And that being the case, I anticipate that I want to start looking at going bullish on this currency pair. As I say, it's not broken out its downward trend yet, but I think it will. So I'm going to start looking to go bullish on that currency pair. Let me now, before I move on to day trading strategies, and I'm going to talk about the scalping one, just give you the remaining talking points. First of all, Scotland and independence. I don't think it's going to happen. I think people, whether they're in denial about it happening, or whether they actually believe statistically and electorally it's not going to happen, whatever the reason is, I'm not too worried and factoring that in yet. I might need to start getting worried when we start getting the polls at the start of September, but at the moment, not a concern. Interest rates, are they going to be rising? Yes, they are almost certainly going to be rising, and sooner than we anticipate. Will that be a knock-on effect for the FTSE? Well, actually, the funny thing is, rising interest rates, because of increased growth and because of price inflation, doesn't necessarily and historically has not knocked back equities. It's been a positive sign for equities that the reason we're raising interest rates is because the economy is doing well. Because it's doing well, it's actually going to be a positive sign. I wouldn't be surprised if as soon as interest rates rise, equities actually move even further, because we'll say, right, great, that's out of the way for another few months. Europe, are we going to leave? No. Problems with Juncker? Yeah. So really, I'm not concerned about that at the moment. It's something which is great for news. It's not really going to affect the markets. It's not even going to affect the currencies against sterling. The direction I've showed you in terms of euro dollar, that's what we're really concerned about trading. Okay, that's the broad picture. Now let's get to the nitty-gritty. We're only on slide 10 out of 73. Okay, the next bit of stuff is really detailed. I've spent hours doing it. I've had 2 screens with trades on it and 2 screens with some of the slides, because I really have for years wanted to teach this stuff. So this is the point where I want to start talking about day trading and day trading strategies. Here we go. This is what everybody's impression of your average day trader is. It's a sad fact, but they think they're some kind of maniac. Of course, they're not. Yes, they might do 200 trades a day. They might be high on coffee and be listening to every single news program they can get. But I'm going to show you a trading strategy that we use, which you can use. I'm going to try and show you step by step at a level of detail I've never done before. And the reason for all of this is in the past it's just taken too long to put all, as you're going to see, you've got 73 slides to do. I've got other things to do up until, than doing the slides. And that's why I'm proud to say, for once, I've managed to grab the time and do it. So that's what I'm going to talk through. Now, let me start off with some of the basics before I go through the nitty-gritty of the strategy. The basics are, what is day trading? Well, in a way, it is no different from buying and selling stuff on a market stall. Okay, it's really no different. You're buying low and you're selling high. You're buying something from a wholesaler at 10 pence and you're selling it for 11 pence or whatever the prices are. Okay, that market stall you see on screen is no different to the kind of trade ticket you will see at any regular broker. Okay, the trade screen that you will see at a typical broker is basically doing the same thing, buy and sell. Now, for some of you, this first part, which is going to go on for the next 5 minutes, is a little bit basic. Bear with me before I get into the strategy. It's just to make sure everybody's up to speed. What you're ever trying to do with these things is simply buy one price, sell the other. The difference is your profit. Now, as you can see, the sell price, you all know this, I'm sure, but just in case there's any beginners, the sell price is lower than the buy price, and obviously, otherwise, we'd just keep buying and selling all day long and keep making 1 point every time. That difference between those two, the spread, the difference between the buy and sell price, that's how much the broker makes from you. Multiplied by the stake, which is, in this case, it's a £1, 1 GBP. So that means if you were to buy this and immediately sell it, you'd lose £1. Okay, you know all this. I'm sure most of you know all this. As I say, bear with me while I bring everybody up to speed for day trading. The day trader is going to hit that buy and sell button about 100 times to 200 times a day. He's going to buy at 43.5. I'm only going to mention the last two figures, 43.5, and he's going to sell at hopefully 44.5 when the price goes up. So the first question is, okay, how does he know when the price is going to go up? I'll answer that. How does he know how much stake to put in? I'll answer that. What does this stop mean? What does this limit mean? How does he know where to put a stop at a particular loss? What's all this margin trade business as well? How much of his account should he trade? All of these things I'm going to answer and give you a strategy, most importantly, on when does he know when to buy and when to sell. Also, of course, what you can do is sell first. If you think the prices are going to fall, you sell at 42.5 and you buy back maybe at 41.5. So you've bought at 41.5, sold at 42.5. You don't the other way around, but it doesn't matter. You've made £1 still. 1 pip or 1 point. The difference between those two numbers is a point is expressed in points or pips, and the stake multiplied by the points or pips is your profit. So there at the moment it'd be a 1 point loss, because buy minus sell is 1 point loss. Okay, very basic. You've all come across it. So let's get into some of the more detail. Okay, first of all, why do people do it? Well, let me show you the maths and the profits that day traders actually make, and then I'm going to show you the profits that we've seen from actual spread betting firms who have disclosed to us how much some of their clients have made. Why do people do it? Well, the first answer is the obvious one: profits. 200 trades a day, if you're making on average $10, only $10 per trade on average, then you're making as much as $2,000 a day. That's a lot of money. And you're only estimating $10 a trade. That's a heck of a lot more. It's a heck of a lot less ambitious target than somebody who says, I'm going to buy some Vodafone stock and hopefully make 2,000 from it over the course of a year. Because you're doing 200 trades in a day and only aiming to make as little as $10, that adds up. Okay, how do we make those 200 trades? How are we going to get 200 ideas in a day? How much time is it going to take? How much are we supposed to bet on every trade? Where do we put our stop loss so we don't lose? And where do we take our profits so we do actually make $10? Those are all the things that I'm going to answer in explicit detail. The next point also as to why do they do it is this. Why do they do it? Well, because if you just buy and hold, you might get nothing. You might even make a loss. Look at the Dow Jones Industrial Average, which I've got on screen. It's been falling. There's a price chart of it falling from July to March. That means anybody who bought the index, or was just tracking the index, made nothing. Their pension funds made nothing over that period, almost certainly. Okay, so that's no good to us. That is absolutely no good to us. That's one of the reasons why people day trade. So they think, I don't want to buy and hold. The markets might fall. They see if I day trade, get in and out quick. They also day trade because they want more control. They don't want to be stuck in a position for a week, a month, a year, or however long they've been told by their investor or their advisor to hold on. Instead, they want to get in and get out quick. They can toe dip in and out very quick. They have more control over their money because they're not exposed to the markets for long periods of time. The other reason they do it, and by the way, I'm reinforcing some of this because people sometimes don't realize the benefits of day trading. Small trade sizes. If you're placing, as you saw on the screen I showed you earlier, trade sizes of just $1 or £1 or €1 per pip, per point move, it's very little risk. You're taking very little risk, and that's a good thing. It means you're in and out and very little risk is taken. That's one of the reasons why people do it. You can't do a £1 bet on Vodafone shares for a year, because if it goes up 10%, you might make £2. But of course, if you're doing 200 trades in a day and you make €10 or $10 or £10, you don't mind that on one trade you've made so little because you're doing so many trades. That's the point. Small gains, lots of trades. Quantity versus small profits. Okay? But there's another reason why people ought to consider day trading, not just because they can start with very tiny sums of money, which mitigates their risk, but the other reason is this. Lots of experience. If you're doing 200 trades in a day, that's more than most buy and hold investors are probably going to do in 10 years. That's going to get you a lot of experience about the markets and understanding the markets in a very short space of time. So the next question, once we've answered why, is who does it? Are you the kind of person who should be looking at it to begin with? Who does it? Well, we've got everybody from students to full-time moms. There's a talk I gave at Bloomberg, and a lot of the people I spoke to and a lot of people I know and that follow me on day trading are all from these professions: retirees, school teachers, professional traders, of course, full-time plumbers, full-time moms, and students, people who, and shopkeepers. I haven't added shopkeepers in there. They seem to be a particularly lucrative, useful group of day traders, maybe because they've got so much time and they understand money. Okay, well, okay, if those are the people who do it, how many actually make money? Honestly, come on, truthfully, how many make money? Well, this is from one particular brokerage where we got the data. Profit recorded by the top trader was about £1 million. Doesn't mean that the top trader's a day trader, but almost certainly. Average profit from top 10 traders was £500,000. Average profit from the top 50 was £175,000, and from the top 100 traders was £100,000. £100,000 if you're in the top 100 traders is not bad. How do I get you in the top 100 traders? Well, watch this webinar and I'm going to show you. I took all this data and I took the data from a whole multitude of other brokers, and then I put it into a book, and I'm going to give you the most salient parts for this strategy that I'm going to tell you and show you. Okay, so what are the big questions you need to know if you're going to day trade? These are some of the biggest questions you need to have answered. Who wins and loses? Which markets are the easiest to trade? I'm going to tell you that in a second. Which market should retail investors avoid? That'll be told to you in a second. Do investors make, let me just blow that up a bit. Do investors make more money in volatile or quiet markets? Which is profitable to go long or short? I'll show you that in a second. Do short-term or day traders make more money? Well, I've sort of answered that already. What are the most common mistakes made by losing clients? How much do top spread bears actually make? I've answered that. Which trading systems work best? I'm going to show you the scalping one in a second. Do technical analysts outperform fundamentalists? Certainly for day trading, and I'm going to show you the scalping method, which is technical analysis based. How long are the most profitable positions held? I'm going to show you that in 1 second. And what impact do dealing costs have? And what rules do profitable traders use for trade size and stop loss? I'm going to give you those numbers. And what do winners do differently from losers? Going to give you that data in 1 second. So let's get on with it. Okay, first of all, I'm going to show you what do winning day traders do right, and then what do traders using the scalping strategy do? Okay, and the scalping strategy rules. Okay, so what do winning day traders do right? Looks like a lot of information on the screen. Let me walk you through it. Okay, let me walk you through it. First of all, winning day traders, when we analyze them from a whole host of brokers, on the whole, there were some exceptions, tended to trade and focus on about 5 to 6 products. About 80 to 90% of them focused on 5 to 6 products. What were those products? I'll tell you in a second. They traded about 2 to 3 hours a day. In other words, they did not trade all day long. They were doing other things whilst they were trading, whether they were shopkeepers, whether they were full-time moms, whatever it was, or school teachers. They were doing other things. Some did other things during the day and then just traded after work because the markets are still open, of course, particularly the markets, the currency markets, the indices that we look at. They both made profits from long and short trades, in other words, from rising and falling markets. Falling markets tended to make profits for them quicker. Some of the most popular products were the Dow, various currencies, and the FTSE. The currency which is the most popular was sterling dollar, but I'll show you in a second the other very popular currencies as well. The time frame they used as day traders was the 1-minute charts and the 5-minute charts, and I'll show you these in more detail. They tended to have 1 or 2 strategies maximum. Now, I'm talking about 80 to 90% of all day traders who were profitable that we analyzed for over a 10-year period for the book that you just saw. Okay? There will be some exceptions, but on the whole, they tend to use 1 or 2 strategies. And I think the reason for using just 1 or 2 strategies was very simple. It's very difficult for the brain to hold more than that. 80 to 90% had winning trades. So over 80% of their trades were winning. This is for the winning spread bettors, okay? The winning day traders. The winning day traders. Of the winning day traders, 80% of their trades were winning. 20% were losing, or 20 to 10% were losing. Okay, as I say, I'll drill down in these figures for my scalping strategy in a second. 52% of the trades were held under 1 hour. If you took all the winning day traders, about half their trades were held for under 1 hour. Half the trades were held for under 1 hour. That gives you an idea of how long did they hold them. A quarter of their trades were held for 1 to 6 hours, and the remainder were held for longer than 6 hours. Okay, so you see how it's broken down. Quarter of the trades were held for 1 to 6 hours. Under 10% of the positions were held overnight. Okay, under 10%. So very rare was it for them to hold positions overnight. That gives you a pretty good definition of day traders right there. Okay, so what do winning day traders do right before I go into the strategy. First of all, when we analyze the winning day traders, now I could have just told you what we do as an FCA regulated firm, but instead I'm going to go through what the winning day traders do first. So I'm looking at a bigger audience than just my own experience. So instead of me just one person telling you, I'm giving you what hundreds of winning day traders do right. First of all, they have a maximum stop loss of around 5 times their average winning trade. Now, that might seem a bit odd to you because that's at odds to what we're often told to do when we're investing. Let me explain this, and I'll explain it in more detail as we progress with the webinar. They have a maximum stop loss of 5 times their average winning trade. So if their average winning trade was, say, £10, then their average losing trade might be £50. Now you might say, wait a minute, Alpesh, they're losing a lot more on their losing trades than they are making on their winning trades. Yes, but they have many more winning trades. How do they do that? I'll show you with a scalping strategy how they do that. Why do they allow their losing trades to have such a big loss? Because a lot of them, those losses turn into winners. That's why. That's what they were doing. They were playing on that. I'll show you this spelled out in the scalping strategy in a second. Let's go back into winners. Winners take a lot of small wins, in other words, and some large losses, very few large losses. Account sizes. How big were the winning day traders' account sizes? Actually, the vast majority, 80% of the day traders we looked at, account sizes were only $7,000, $20,000. You can convert that into pounds as well. I've converted it all into US dollars to make this webinar available for, applicable for the whole world. Okay, account size $7,000, $20,000, 80% of day traders. Lots of small bets compared to their account size. I'll explain that in a second. In other words, what size were they betting compared to how much money they had there in an account? I'll show you how little it was, because that was the cleverest thing they did. The cleverest thing the day traders did is they bet small. 0.1% of their account per point on any index or currency future. Let me explain that. If they had a $20,000 account, they bet $20 per point move in the Dow or, say, sterling dollar or euro dollar or FTSE. Do you see? 0.1% of their account was the bet size. Not because that's how the mathematics, they worked it out. It's just how it worked out. When we looked at the winning day traders, that's what we saw. That's what we saw play out amongst the winners as day traders. $20,000 account became $20 per point move in the Dow or the major currencies. And the Dow, the major currencies, gold, and were the key things they traded on. Obviously, if they were trading Apple stock, and very few of them as day traders did, obviously they'd change the maths a little bit, but I'm only going to focus on the most popular products traded by the most profitable day traders, okay, to give you the best information. So why did they trade such a small size? Okay, before I show you the strategy, why did they trade such a small size? They've got $20,000 in an account. Why bet $20 a point move in the Dow and so on? Why such a small size? The reason for that, the reason was, well, first of all, they'd have opened 3 to 5 positions at any one time in different products. Okay, so that was one reason. The second reason was if they lose, then they lose small. Because obviously if they're only betting $20 and they lose a few pips, you can see they're only not going to lose much. They really feared losses. It was one key characteristic when we interviewed them, met them. Fear of losses was critical. It wasn't greed about profits. They hardly talked about profits. They feared losses. They knew if what they did was right, then that'd be fine. So what are the products then? Which are the best, most popular day trading products by the profitable day traders that we met and interviewed? Here they are. These are the products, the most popular products that we found. Doesn't mean that you can't day trade with products outside of that. I'm just telling you what the most popular ones were. Okay? So the next issue is, well, which time frame did they trade these on? What time frames were day traders looking at when they traded this? This is the time frame. Really, it was 1-minute charts. It was 1-minute charts they'd have on their screen that they're looking at, or 5-minute charts. Okay, well, how many signals does that give up? I'll show you in a second with the proper scalping strategy. How many signals does it give up? When did they know when to buy? When did they know when to exit? When to put a stop loss? How do they monitor 5 positions? I'm going to answer all of that. I'm going to answer all of that. Okay, so first of all, how did they set up their screens? This is my screens. It's just 2 of the 4. They'd have charts on one side and they'd have the trade prices, the order screen on the other. What are order screens? How do you read price charts? I'll show you that for a day trading strategy in a second. If they didn't have two screens, they might have two laptops open. If they didn't have two laptops or two screens, then they would cram everything onto one screen. The vast majority had at least two screens up or two laptops up. Some, however, as with the scalping strategy I'm going to show you, were able to trade it just off an iPad. Just off an iPad because they didn't look at charts, they just looked at the price momentum. So let me show you, okay? Let me show you the scalping strategy then. Let me now that I've shown you what winning day traders do, let's get into nitty-gritty and show you the specific strategy which gives you 200 trades a day, and I'm going to break down the profits and the numbers of how we get to all that profit, okay? So let's start. Scalping, okay? That's the strategy I'm going to talk about today. Up to 200 trades in a day, about 5 trades per product in an hour. In other words, in an hour, if you were trading the FTSE, you might place up to 5 trades in 1 hour. If you're trading cable at the same time, then you might be doing 10 trades because you're doing 5 on the FTSE, 5 on cable. How are you getting so many signals in an hour? Okay, I'll show you. 80% of trades last 5 minutes to 2 hours with this strategy, with the scalping strategy. 80% of the trades with this. So remember, all the people I interviewed who were winning day traders, they use different strategies. I'm just picking one of the strategies, and over future webinars I'll go through others. I'm going to go through one of them and show you this one. 80% of the trades lasted 5 minutes to 2 hours. That gives you an idea how long each trade lasts, how many you're going to do in an hour. Yeah? 80% of them were winning trades. Whoa, Alpesh, if 80% are winning, surely I should be making lots of money. Well, wait a minute. Let's just hold our horses and let me go into it. Okay? Strategy scalping. Let's tell you a bit more information. Now, I'm going to go through each one of these. Let me zoom in to each one of these things. Okay? Here we go. The win target for this strategy is about 3 to 5 pips. Ideally, each time you win, you want to get 5 pips. When do you add to a winner? You add to a winner if the price is moving sharply in your favor. So once you're in a position, you might add a new position. Okay, I'll tell you in a second how much you bet again. Okay, you add to a winner if the price is moving sharply. What does moving sharply mean? You look at the chart, and I'll show you in a second what moving means. What about losers? You add to a loser up to the maximum of 3 additional positions. So whatever position you've already opened, if you're losing, you'll add a maximum of another position, and if you're still losing, another position, and then another. When do you add this? I'll show you in a second, but you're adding to your losers. You're not just adding to your winners, you're adding to your losers. You might say, whoa, Alpesh, why am I adding to my losers? Remember, it's very small bet size. It's 0.1% of the account size per point, i.e. 20. It's a 20K account, it's $20 per point. So you're not increasing too much extra risk, okay? What's your stop loss? The stop loss is if 3 times your winning target, i.e. 3 times 5 pips. So remember, 5 pips was your winning target. 5 pips were winning target. 3 times that is lost. In other words, if 15 pips is lost, you get out no matter what. You don't just keep the open positions losing forever and ever, okay? Most important, you trade in the direction of a trend, and I'll show you this in a second, or of a pullback. See next, that's the core of the strategy. I'll show you that. The products you trade with this strategy are FTSE, Dow, sterling, dollar, well, any of these currency pairs, sterling, dollar, yen, euro, and then you've got gold. Those are the ones. Can you trade others? Yes, you could. I don't do it. I scalp with the most popular ones because they're the most volatile. They move the most smoothest, okay? Let's go into more detail. Explain again, Alpesh. What do you mean add to losers? Maximum 3 additional positions. Remember, our profit target is 3 to 5 pips. If we lose 3 to 5 pips, we add another position. If we lose another 3 to 5 pips after that, we add another position. If we lose another 3 to 5, we add another position. But wait a minute. If we're down 15 pips from our entry, then we've lost 3 times our winning target, i.e. 3 times 5 pips, 15 pips. We get out no matter what. Got it? Got it? Yeah. Let's go into more detail again. Why? What's the theory behind this? And then let me show you some of this working. People say you need a very small spread. Where do you get that? Okay. Listen to what I just said about popular products. FTSE, Dow, sterling, dollar, yen, euro, gold. What's the spread on those? 1 point. Which broker? I'll show you in a second. Which broker? You're absolutely right. It's a great question. You need a very small spread. Where do you get it? With the right broker. It's actually a brilliant question. I'm going to show you which brokers give you smaller spreads and how you find them. Okay? There's another thing you need. Other than spreads, you need brokers who are going to give you some money back, and I'll show you where you find those as well. So what's the theory behind this? Well, the theory behind this is very simple. The market has short, sharp moves. That's why we day trade. We get a short, sharp move, we get in, we get out. Okay? That allows us to capture many small profits with small moves. When it moves fast in your favor, you quickly add to your position. That's also part of the theory. If it's short and sharp, it's moving in your favor, bang, you get in. As soon as it slows, you get out. I'll show you pictures of this so you can see it in a live trade that was done earlier today. If you have a loss, you add to it. Why? To reduce your average entry price and on the theory that the market will come back. Does it really? I'll show you in a second how and when. For the scalping strategy, you do that. Under other circumstances, you never add to losers. Under scalping strategy, you do because it's controlled. Let's look at some of the profit maths. What's the profit maths? And I'll show you some of the images of explaining this. The maths profit is this. 8 times 5 pips. So you have, out of 10 trades, you have 8 trades where on average you make 5 pips. Sometimes you'll make more, sometimes you'll make less. That's 40 pip profit. You'll have 2 trades where you lose the maximum 15 pips. That's 30 pip loss. Got it? Net profit, 10 pips. We're talking averages here across 10 trades. Got it? Right. If you're doing $20 bet per pip, that's $200 profit for every 10 trades from what I've just said, obviously. 2 trades per hour per product, and if there's 5 products, that's 10 trades per hour. That's 100 trades per day. That's $2,000. Simple maths. I'll put that on screen for a second while I take a sip of water, just so you know this. Somebody said, hey, wait a minute. Don't brokers hate scalpers? Yeah, but guess what? 2 trades per hour, they're going to love you because you're trading. They don't care. I tell you when they'll hate you. If after a year they spot you to making $1 million out of them, hey, by then, so what? Find another broker. It's a nice problem to have. So they don't actually hate scalpers unless it's foreign exchange trading and you're messing them around a lot. And the strategy I'm showing you, you're not actually messing them around. Strictly, this is not even scalping. It's actually momentum trading. I've called it scalping, but scalping's where you absolutely go nuts with hyperactive trading. We're not going to go nuts because it's actually not worth the time and effort. So with this strategy, you've seen the maths. Let's continue with it and show you some actual trades. First of all, caution. Assume what I've just shown you, $2,000 a day. Assume you're only going to make 10% of that whilst you learn and you make errors. Secondly, how do you increase profits? Well, you could have a larger account size or a larger bet size. You could observe more products. So just be cautious with everything that I've said. And also when you start getting greedy and thinking, oh, wait a minute, I want to make more, get a larger account size first and observe more products rather than just increasing bet size. Okay. Now, the most important thing that you need to know with this strategy, wait a minute, when do I enter a trade? Method 1. Okay, there's 2 methods to entering a trade. This is a 1 minute. This is a 1 minute bar chart. Every single one of these is 1 minute on the Dow Jones Industrial Average. Okay, today. Got it? So each one of those bars. All you're doing, the first method is you enter in the direction of the trend. As soon as you see a trend, bang, you're in there. You might say, Alpesh, wait a minute. By the time I spot a trend, it's too late. No, it's not. Each one of these bars represents a minute. You got 3, 4, 5 minutes before you got a trend in place, and then bang, you go in. That's enough to still capture a few pips. Okay, another trend, another trend, another trend, another trend. You can see the timeline. That's just Wall Street, and this is just one method. Look at that, how sharply it moves up. When it starts moving up very sharply, you start adding additional positions. You add additional positions along the way. So if you were betting at, say, $20 a pip, you do another $20 a pip trade, another day $20. When it's in your direction, you also get off those additional positions as quickly and as soon as you start seeing the price stall. So method 1, you look at the trend. You look at it by eye. No moving averages. There isn't enough time if you're going to be doing 200 trades a day. You look at it. You look at it. You look at it by eye. You look at the trends. You look at it moving in your direction and bang, in, out, in, out. I'll show you actually this happening in a second. Okay, I'm going to show you this in 1 second. All right? The trend. And sometimes the trend is just phenomenal. Look at that move up. Brilliant. Lovely. It's not as hard. And these are 1-minute charts. Guys, you've got ample trends happening on a 1-minute chart. It's not as if it's just going sideways or there's no opportunities. And scalping doesn't mean getting 1 pip here or there. We're talking sometimes getting 10 pips or more. Okay, what's the second method of knowing when to get in, when to get out? Lots more questions yet to be asked, I know. I'm going to answer them all. Second method, the pullback. What's the pullback? Same 1-minute price chart. You draw a line to represent the average price of the past 9 to 12 hours. Okay, and I've drawn an eye. You do it by eye. What's the average price? It's basically a line. I've drawn it in red there, above which as much time the market was as below it. In other words, the market traded as much time above it as below it. That's my pullback line. That's the line around which the market traded. I expect pullbacks to that line when the market price goes too far above or below. What's too far above? Guess what? As soon as it starts moving a bit above it, I start thinking to myself, right, as soon as this trend stalls, I want to go short. Whilst the trend is in place and there's some momentum, I'll go long using method 1. Method 1, I'll follow the trend upwards. Method 2, as soon as it stalls, I'm pulling back to the value line. Do you see how very quickly you're getting to those 200 trades in a day, especially if you're looking at 5 products? Do you see how we're building it up? But we're only looking to capture 3 to 5 pips every time. Can we do it? I'm going to show you on the next slide how we actually can get those despite the spread between bid and ask. Okay, I look at 1-minute charts because there's ample action happening on a 1 minute. Other day traders we found looked at 5-minute charts. If you're looking at 5-minute charts, it's fine. You might get fewer signals, but it's fine. Okay, so next, how do you know the trend? Alpesh, you just showed me pictures and said, oh, these are some lines. How do I know the trend? 2 ways. You can either look at the prices. Remember, the brokers will just show the prices. The more intermediate and advanced traders, even those doing it on iPads on a train on their way home, and I've got friends doing this, will buy and sell. Just look at the price. They'll just look at the price and go, right, it's moving really quickly. That's a trend in place. Bang, buy, buy, buy another. Now start selling. Now start selling. Now start selling. They're not going to sit there and check their P&L for every single one. They'll remember the numbers. 42, I bought at 42. I bought at 43. I bought at 44. Bang, it's now at 45. It's now at 47. Oh, it's coming off a bit. Right, sell one lot. Sell another. Sell another. Then they'll look at their account because it's too quick to be doing it like floor traders, yeah? That's day trading, though, for you. How do you also know the trend? You can look at this. You can look at the chart. You can see the trend. As soon as it's moving in that direction, you add to the position as long as it's in your favor. As soon as you see some of that come off or stalling, bang, you get out. You get out because it's only about capturing very small gains in a short space of time. Remember also, we're not just going long, we're going short. We're not just trading it on the trend going up, but the pullback on the way back. Okay? What does that mean? Well, look at shorting. Let's just look at this for a second, okay? Let's say this is the Dow, which it was today, and you sell at this point because you think it's going to continue falling lower. You sell at 41, okay? You're selling at 41. Ignore the 168. You're selling at 41, okay? Anticipating to buy at 36 because you think it's going to fall to 36. You place your stake, whatever it is. In this case, £200 a point. It's not going to be £200 a point for most people, okay? It might be £1 a point. And you expect a 5-pip profit. If you make those 5 pips on £200 a point, you're going to make £1,000. On £2 a point, you're going to make £10. That's fine. You're going to do a lot of trades, so £10 is fine. Okay, let's not get greedy. Sold at 16841, anticipating to buy back. What happened? What happens? We move forward, and indeed, it fell in line with the trend. We sold at 41, remember. We bought back at 36, which is what happened. It went down to 36. Well, it went to 35 and a half. Okay? Made slightly over £1,000 tax-free, no commissions. This was a spread bet. Doesn't have to be spread betting. You can do this on anything you want. I'm going to tell you the broker we use in a second. Okay? Okay. Simple, straightforward. What are the risks? I don't want to just say to you everyone's going to make lots of money. What are the risks? Well, first of all, that you don't exit your losses. That's the biggest risk. And you don't trade with the trend or with the pullback. That's your other big loss. Those are your biggest losses. And trust me, every single person who's ever lost at day trading didn't exit at their losses that I've showed you and described to you, and they didn't trade with the trend. It's vital. In order to get those 8 winning trades out of 10, you need to be trading with the trend or with the pullback. Okay? Those are the biggest risks. So how do you do it? That's the next question. Okay, first things, you open an account with a big, hairy, friendly broker. Why big? Because you don't want them going bust. Trust me, I've had experiences with bloody brokers going bust, and it's annoying. I don't mean Lehman Brothers. I don't mean Bear Stearns, who are my brokers to my hedge fund. They went bust, for God's sake. I'm talking about smaller players as well. Okay? And why do you want them to be friendly? Because if you want to ask questions, you want them to be friendly. So we went around and interviewed a whole load. You want brokers who've won awards. You want a value for money broker. Okay? Okay, very simple. You want to get on ones which gives you money and is quick to open. So you want ones where they say to you, guess what? We'll give you £5,000 or up to £5,000 depending on the amount of money you trade with. Why is that important? Because then you're not just making money from the pips, but you're also making money from the broker. Why are they giving you money? Because they want you to trade. Hey, no problem. They give you this money based on the amount of money you put in the account and how often you trade. Well, a day trading strategy means you trade often enough to get your hands on some of that. Okay, and you want a broker, most importantly, that you've been recommended, word of mouth, usual stuff. Picking brokers is like picking plumbers. Okay, it better be word of mouth. So anyway, our choice, I've given you the strategy, our choice, investingbetter.com/bwin. Why did we pick this one? Well, we did all the interviews and everything else. We went through it, and we liked them. We started using them. We started making money. They didn't stop us making money. When all of that happens, guess what? We're going to recommend them. So we picked them into Trader. You might have seen it. You might have seen my face all over it. And they give you £5,000, most importantly. Okay? So like I said, you want a broker where you can be up in minutes, up to £5,000 bonus as well. All you do, click on that link, and we'll also send you, for opening an account, a free copy of the book that I showed you, which had trading strategies and which of the day traders made money, which didn't. You know, answered all those questions that I described earlier. I'll give you a free copy of that book. It's an electronic copy. It's available in hardback as well, but we're going to send it as an electronic copy to people. So how does it then work? I've still got to describe to you how it works. Step one, you click on the link, you open an account. That takes about 5 minutes to open an account. You fill in all the usual info, like username, password, contact details, address, you know, all that kind of stuff. Second thing, takes 2 minutes. You familiarize yourself, whether this broker or any other, with the trading platform. All trading platforms, pretty similar. Guess what they are? Okay. All of them are pretty similar. I'm going to answer all questions in a second, by the way. Wall Street, they've got the product. You press the trade key and you'll get a ticket like this. Or you press the charts and you get the charts. Okay, it's really that simple. But I'll take you through it in a second. The part about familiarizing yourself with the brokerage is that as you do that, you open up the trade ticket. You need to know, okay, what does all this mean? Okay, for those who haven't seen trade tickets, and I'm sure most of you have, I'll run through the easy bits first before I get back onto the complicated stuff. First of all, what we're trading might be the Dow. I've told you the other products. Buy and sell buttons. Simple. You click on those, and you're off to the races. The second thing you therefore need to know is the stake. I've told you how much to bet based on your account size. Actually start with a demo account first until you're consistently making profits. All right? But because you can trade as little as £1 a point, I love it, because you're not going to lose too much, right? Secondly, this is optional. You can fill in at what price you want to sell at a loss automatically if the price goes below that price. If you were to tick on the guaranteed stop box, then even if the price doesn't trade at that price, it'll automatically stop out even if it jumps below it, gaps below it, as it were. Optional also is the limit distance. Let's just look at the margin. Okay, deposit needed to bet. Remember we put £1 a point, so it'll tell you how much money you've got to have in your account. You have £200 in your account in order to trade that. That's still your money. It's a deposit. Okay, so safety first. Just some background for investingbetter.com/bwin. Intertrader, it's FCA regulated. It's run by London Capital Group. All funds are segregated. What if, however, what if day trading is not for you? What if you can't spare 1 to 2 hours daily because you're very busy? Okay, and that's fair enough, because having looked at all of this, some of you might say, you know what, I can't spare 1 to 2 hours daily to do this, Alpesh. Fair enough. What if day trading is not for you because you want expert advice instead of doing it yourself. And more importantly, what if day trading is not for you because you don't want to be paying big fat broker fees to people to manage your money? Absolutely not, you don't. There's a lot of people who say, actually, why should I be paying a broker anything? I don't want to do day trading. I don't want a broker, a fund manager, basically, to manage my money for me, right? Because you don't want to be paying managers lots of fat fees. What if all of those things aren't for you? Then what I'm going to suggest you do, for those who don't want to do day trading, is get something like investingbetter.com's Newsletter Pro. It gives you the entries, the stops, the limits. It tells you all of this instead of you working it out. And what it does, instead of day trading and being hyperactive, because you don't have all that time, remember, it'll give you 1 or 2 trades which last over a period of 1 to 2 days themselves. Okay, so you get 1 or 2 trades a day, which last a few days. You can see here, for instance, the kind of trades. 45 pips. It's a more civilized way of trading. Let's put it that way. 45 pips, £30 a pip, £1,350, made over a week. We give you the entry and the exit. Okay, so that's going to be more suitable to people because sometimes people say, oh, Alpesh, you talked about day trading, but I've just discovered it's not for me. It's not for me. So what about that? What about that then? Okay, sterling dollar, 50 pips and £30 a pip, 1,000. These are all recent trades which were in the newsletter. Okay, so some people say, I want to place a trade. I want it to mature over a week because I don't want to be looking at it all the time. I want to place it. I want to know where the exit is and so forth. And I don't want to be trading hyperactively. So here's the great alternative. You've got the newsletter into your inbox, including on gold, £4,800 at £3. You can see there per US cent, 1,600 cents gathered at 3 cents, £3 a cent, and that's 4,800. Or as again, currencies, euro, dollar. So this is the perfect antidote. The perfect antidote to day trading, which is you get the trades given to you, they take over a week, and they make profits for you. Okay? So that's the alternative. And that's why I wanted to show you this, and I said with gold as well. And these are all actual ones. We've had great testimonials on this as well. I can only thank you so much for the insight. It's given me the confidence to start trading. Above all, sleep at night. Thank you for making your analysis so simple and clear. Above all, profits speak for themselves. Many thanks to your newsletter. It gives some great insight. The way you explain what is globally to affect the markets tremendously. I do like the service very much. Very relaxed way of trading. So I wanted to show you that for that reason. By the way, these are some of my clients, past and present, who have paid for me to explain trading to their audiences. So as I said, that's your alternative to day trading. Now I'm going to answer some questions which have come up. Again, FTSE 100, entry, exits, 90 points, £30 a point, £2,700 over less than 3 days. So that's the reason why I wanted to show you this. If you like that as a method, investingbetter.com. If you prefer the accounts, investingbetter.com/BWin. Okay, we're coming up to expiry of the webinar. Let me answer. Do InterTrade have a desktop platform? No, I don't believe so. It's all on the web. Everybody tends to trade through the web now. What about stop loss along with entry and exit on the Pro service? Yeah, so the stop, you've got choices. You either put them in, as I said, guaranteed, or you just enter them as you monitor it. Some people prefer to put them in as soon as they enter the trade because they know what they're going to do. Personally, I prefer to watch and then enter them myself. Is there an extra spread cost for guaranteed stops? Guaranteed stops tend to add an extra pip. Most brokers will do that. In some news in the day drastically affects a trade, would intraday correction email be sent out? And if there was a trade that was only identified in the afternoon, say, would a special email be sent out? Yes, sometimes we send out special emails, special alerts when there's been a drastic change, absolutely. Do you give stop loss levels on the Pro? We monitor it, and sometimes we have, well, actually, almost always we have stop loss levels. Yes, that's exactly right. Because what we're looking to do is have a reward to exit. The only times you won't find a stop loss, in the rare circumstances where it's just self-evident where the target is. But yes, there's a stop loss. By the way, I've put in entry and exit levels there. But yes, we do put the stop loss levels in for you as well. Should you look to use a non-dealing desk broker? Bit of a technical question there. What the person there saying is where somebody, in foreign exchange, where the broker themselves might not have positions. Yes, do look at foreign exchange brokers as well. and compare. You know, so one of the things you can do is trade with this broker, trade with others, see and place the trades at exactly the same time, exit at the same time, see which ones are doing better for you. That's something that I often recommend as well. How far back on the 1 minute chart would you look to decide the average line? As I said, I tend to look at about 6 hours, but you know what? It's something which comes with experience. Sometimes you realize that when it's moved to a new level and it's got a new level it's trading around, that only 3 hours is relevant as well. I think, what percentage winners do you have on the longer trades? On the longer trades, we're looking at about 70% are winners on the longer trades. It's a very good question. Alpesh, where can I see this webinar again? My screen froze on the S&P 500. We will email everybody with that. Ladies and gentlemen, I have to leave you now because exactly we've run over schedule and there's appointments as well. One last question. Do you use indicators on your chart? Yes, you can see them for the newsletter. We use the MACD. For day trading, no, it's just bang right in there. I hope you've enjoyed it. Thank you all very much. You will all get an emailer with the replay as well. Thank you.